Thank you, Paul. Ladies and gentlemen, it's a great pleasure to be able to discuss with you the topic of the Asian consumer and how it will impact growth and inflation in emerging Asia and at some point also globally. So I'm going to start with discussing population trends in Asia because obviously it's key to understand how many consumers there are and there will be to purchase goods and services. I will then look at the state of the Asian consumer, which I think is dormant at this point. And in particular, look at a number of countries to review where we are regarding consumption, in particular focusing on China. Finally, I will address the question how we can revive the Asian consumer and what would be the precise implications for growth and inflation if consumption in the region does pick up. So let's begin at looking at population trends in emerging Asia. Now, everybody knows that the countries that are the most populous in the region are China, with about 1.35 billion people, and India, nearly 1.2 billion. And on the left-hand scale, we have the rest of the pack. Obviously, Indonesia is leading. Vietnam and Philippines are also close to 100 million. In total, the so-called Asia 11, the biggest emerging markets in the region, are home to 45% of the world's population. And the composite number for those 11 countries is 3.1 billion people. So obviously, this provides a huge potential for growth of consumption and for growth of the economies if consumption is revived. The population in these 11 emerging Asian countries is rising relatively fast at an annualized rate of about 1 percentage point. This is not a huge growth rate because it's an average for these countries, but it's well above what we see in the Eurozone, for example, where the biggest country, Germany, is experiencing actually a contraction of their population, excuse me, at an annual rate of 0.2%. So this necessarily reduces the potential of growth in Germany, but on the other hand, the 1 percentage points per year growth in Asia is something that boosts our potential for economic expansion because we are adding about 30 million people per year. It used to be a little bit more, but it has stabilized at about 30 million people, right? So that many more individuals will consume whatever they need as long as they can afford it. Now, the problem with trying to extrapolate the kind of population growth and project levels of consumption based on it is that the biggest gains in population are occurring in countries with the lowest GDP per capita, which means that consumers there, even if there's more of them, they cannot add a lot in terms of dollars. So India accounts for half, 15 million per year, of population growth in the region. China, only about 7 million, much less. Indonesia and Philippines count as well. Nobody else really matters. In terms of growth rates, interestingly, on the left-hand scale, Singapore is experiencing the highest growth rate of population in the region. I guess it's because of all the expats that are moving there from London to avoid the high taxes in the UK. And India is the second fastest growing population, about 1.6% per year. So we are facing a situation where, yes, potential is strong because we have 30 million new people per year in the region, but on the other hand, most of these people live in India, where GDP per capita is so low that even if they enter the consuming group of individuals, they will not spend a lot. And this limits potential for growth of Asian consumption. Now, what's more important is how many wage earners we are adding per year in the region. And the number is about 10 million. There was a drop during the crisis. We lost about 15 million jobs. But already in 2009, 10 million new jobs were added. And there is 1.05 billion wage earners. So that also gives you a picture of how much potential there is for increase in their spending. But again, unfortunately, job growth is concentrated in less developed countries. India doesn't release the data, but the biggest annual changes in payrolls we had in China in 2009. We don't have data for 2010 yet, but the data we do have shows that Indonesia is the second biggest creator of jobs, followed by the Philippines. So again, the countries where wages are relatively low, so adding all these people will not increase consumption a lot in US dollar terms. Now, why am I saying that the Asian consumer is dormant? Let's have a look at how much consumption accounts for in terms of GDP and growth in the region. This chart shows the share of GDP that private spending accounts for in emerging Asia, the US, and in the Eurozone. Not surprisingly, in the US, it's a very high and stable share, about 70 to 75%. In the Eurozone, it's about 35%, but trending towards 40%. On the other hand, in Asia, over the past 2 years, the share of consumption in GDP has been trending down towards 40% as well. So it doesn't look like the Asian consumer is contributing, is accounting for that much of economic activity. And now let's look at another angle, how much consumption is adding to growth in the region. Asia, the green columns, well, consumption is adding about a third of growth, right? But it's less than in the US and much less than in the Eurozone. US and Eurozone were lagging during the crisis. Obviously, these are the hard-hit countries. But now we are more in the sort of normal conditions where the share of growth coming from consumption is much bigger in the developed world than it is in Asia. And on one hand, it tells you about the potential that the Asian consumer has if they wake up from their dormant state. But on the other hand, it tells you that, well, it doesn't look like they are waking up yet, so that potential will not be realized just yet. And here is an overview of the past 2 years where you can see that this part of the world does rely on investments more than consumption for their growth. And you have the GDP growth rate, and and the contribution of investments, the dark green columns, is the biggest, clearly, right? Private consumption, the stripes, accounts for much less. This is why I'm saying that the Asian consumer is dormant. Maybe in Hong Kong it doesn't look like that, right? Because everybody here spends a lot. But on the regional scale, consumption is not adding as much to growth as it could be. And here is another chart that shows that the share of growth that comes in Asia from consumption, from private consumption, has actually been in decline. It has stabilized at a level that is, relatively low on global scale, maybe rebounded a little bit from the lows, but it's much lower than the share that's coming from investments. So will the Asian consumer be able to pick up the baton as investment slows? Maybe. It's not certain. There are some signs that consumption contribution to growth is stabilizing, but who knows if it will be rising in the future. And I will try to answer that question a little bit later. Why is the Asian consumer not spending more? First, we have weak gains in real income. Nominal incomes are rising, in some cases more, in some cases less, but they are rising. However, inflation is eating into them to the degree that not that much is left in real terms. China stands out. Wage growth there is strong. However, the high saving ratio keeps the Chinese consumer constrained. There is one bright point, though. If you look at year-on-year growth of private consumption, this is the gray line here, it is on an upward trend. Investments, the green line, is on a downward trend. It means growth is still there, but not accelerating as much as it used to be in the crisis years, where the governments were trying to stimulate the economy through investments. But the growth rate in consumption is picking up a little bit. And it is a ray of hope. If that trend continues, we will get an additional boost to regional growth from the consumer. Now, you can also think of how much of the growth that we see reported in headline numbers for the whole economy is generated from consumption. So we know that, for example, in China, the growth last year was 10.3%, right? How many percentage points out of that were generated through consumption? On the regional scale, the consumer is generating about 3 percentage points of the total GDP growth in Asia. It's more than in the US, it's more than in the Eurozone. Again, it's not a large share of overall GDP growth because in Asia it comes mostly from investments, but there is a lot that the consumer is contributing. And just imagine how much more they would be contributing if the growth of consumption, if the share of consumption in regional GDP increases to US levels. Then Asian growth wouldn't be 8% this year in terms of the whole GDP, but it could be up to 12 percentage points. Obviously, there is a lot of differences within countries. So this chart shows that consumption accounts for about 45% of GDP in emerging markets in Asia overall, but in China, for instance, it's only 35%. On the opposite pole is the Philippines, with about 80% of GDP coming from consumption, right? So there's a lot of regional differences. And it means that if the countries that are lagging catch up, in particular China, there is a lot of upside for regional growth. Now let's look at China a little bit, because it's a very interesting case. Like I said, it stands out in the region in that incomes are rising here much faster than in other countries. But at the same time, it stands out in that consumers are spending a relatively low share of that income on purchasing goods and services. So China is a land of promise because growth of household income, be it real or nominal, for the past 10 years has been in double digits, especially the real growth, the gray columns, topping 10% in recent years. Looking at urban households now, just in terms of wage income, the scale here is bigger, goes to 30, so it doesn't mean that the columns are lower. In fact, real incomes in China are also rising at about 10 to 15% per year. So it seems that there is a lot of potential for spending. However, it's not happening. In China, the share of consumption in GDP is declining. Over the past decade, it fell from 47% to about 36%, right? How is it possible? Consumption is also not generating that much in terms of share of GDP growth. The trend is declining as well. Only about a third of Chinese GDP growth comes from the consumer. That's very, very little. Why is that? Well, the high savings rate, right? Urban household savings rate over the same 10-decade period rose from 23% to 29%. People are saving more. Now, why is it that the Chinese consumer is not spending? Why is it that the savings rate is moving higher? Well, it's all boils down to demographic trend. Please look at this chart. This shows the historical data for the working age population and our projection for the future. And the same for the retired population. As you can see, the working age population, of course, has been in a small increase, but it's plateauing now. And according to our forecasts, it has actually peaked. It will come down. At the same time, the population of retirees 65 years and older has begun to pick up. It's currently at about 150 million, but in 10 years, it will be about double that, about 300 million. So we have a situation when the dependency ratio, the number of retired people as a proportion of people in the working age group, is rising fast. It's about 13% right now. It will be 27%